Daily markup, EURUSD for Thursday, the 3rd of August, 2023. This is the daily chart. We are, as far as the swing is concerned, we are bullish. We've had a break of structure here, which was on the 12th of July. After that, we are in the pullback phase. Currently, I expect the price to come down to this demand zone. This is I would consider this like a high probability demand zone because it has swept liquidity. It is also a flip zone, and it has led to a daily swing break of structure. So this is a high probability demand zone, and I expect the price to come down to here and possibly reverse from here. So that's as far as the daily is concerned. The swing is bullish. However, we are in the pullback phase, so price is bearish as far as the daily is concerned. Moving on to the 4-hour chart, this is what it looks like. This is how I map my structure, my swing structure. So this is the 4-hour break of structure over here, after which we've had a bit of a pullback. I haven't marked this, but I think now we can. And this is a 4-hour break of structure with this candle close that happened below this line. So this becomes my H4 break of structure, and therefore this is also a strong swing high is this point here, which goes into my H4 object. So this is what the H4 looks like. This is my swing break of structure. After break of structure, we can expect a pullback. This is the area that I would expect price to pull back to and then continue further down. Nothing more complicated than that. We do have some extremely clean, unmitigated, supply zones over here. And in case, we reverse from here, then probably this will just act as places from where price would react. But as of now, H4, the swing structure is bearish, which is in line with the daily pullback, and we've already had a break of structure. We can expect a pullback happening. We can have a look at the 1-hour too and see if there are any significant zones. We do have an unmitigated H1 supply zone here, and we can see it has very good inducement. So price could probably move up into here and maybe into this zone and then continuing further down. So that's as far as the, let me just clean this up a little. So that's as far as the H4 is concerned. I would like to shift this also. Yeah, okay. Moving on to the M15. This is my M15 structure. So obviously M15 is also bearish, as we can see, and it makes a lot of sense because now the daily, we are in the pullback phase. The H4 is bearish, the M15 is bearish, so everything is absolutely aligned. And what we have to now look for are zones from where we can short. So we've had M15 break of structure, and probably the pullback is happening. Maybe it has pulled back over here. Is this really into, this doesn't look like it's come into premium. So this is the EQ. We're still in premium discount, and I would expect price to kind of come up, pull up over here, and then kind of look for shorts, but not at the moment, not in premium. Also, if you look at these two zones, if you look at this zone, this is a very, very probable, high probability zone, because what did it do? When price came down over here, from this demand zone, we've had a strong reaction, and then we kind of flipped this and led to a break of structure. So this zone is a flip zone. Yes, it has also swept liquidity. If you look at this high, this is 9865. If you look at this price high, this is 9867. So there's definitely a sweep of liquidity here. So flip, sweep of liquidity, went on to break structure, which is, the major breakout structure. So yes, it's a highly probable supply zone from where once price moves here, we can expect reaction. However, if we look at this zone, also this zone is, further up than this. This could possibly act as, if you want to really look at it as inducement, but this is, I think, a little too far from here. But nonetheless, I think it's a high probable zone. If you look at this zone, price has already kind of moved up here. It has reacted, and we kind of now continuing, and it could very well happen that price comes up here and then just kind of goes down from here and continues further down to the daily demand and the H4. So if you really look at this, you can see that we have this is our daily demand with a nested H4 and a nested M15. So price could very well kind of just go down from here. It doesn't have to come up to this high probable zone. And we as traders, we just need to kind of respond to what price is doing and be prepared for wherever it wants to go. It could also very well reverse from here and, just kind of rocket up from here. So don't be married to your analysis. You don't have to be right. This is just a framework that allows you to kind of look at price, and there are expectations that we might have, but if those expectations are not met, that's also absolutely okay. Be prepared to respond to what price action does.